In this next video, I'm also going to use the same paper that I used on the retained, on the ordinary share capital one, but I'm going to do retained income using June Eastern Cape 2021. So in this case, the most important thing when they give you retained income, for example, or even your ordinary share capital, is to know how to populate the blank spaces of your answer book before you start working on the figures, because the figures are obviously going to be provided, maybe the bulk of them, but you need to know which figure goes where. So you have your balance at the beginning of the year, and then here you're going to have net profit after tax, and then here you're going to have repurchase of shares. Okay, and then you have your ordinary your dividends on ordinary shares. Your dividends on ordinary shares is made up of interim dividend, and it's also made up of final dividend. Okay, now remember, your repurchase of shares must be in brackets, your dividends must also be in brackets. Okay, now if you're using the same information there, right, firstly, if you look at information A, you have your dividend on ordinary shares here, this one. So this 390 represents your interim dividend. Okay, so it means on this note here, your interim dividend is already provided is 390. So you have that. Now, and then if you go on with the information and you look at information, it's G, right? Information G. Now, information G says to you, after the actual tax was calculated on the correct net profit for the year, it was found that the provisional tax paid was 35,500 less than the actual tax, right? Why do we need that? We need that because of information H as well. H says the income tax is calculated at 30% of net profit, which means you are not provided with the net profit after tax, but you are provided with the means of calculating your tax. Then you make use of your tax to calculate that. Now remember, they are giving you 30% as your tax. So what that means is that I normally say to people, net profit before tax, right, can be denoted with 100. And then your tax, like in this particular case, is a 30, which means your net profit after tax is 70. Right? Now, so what do we want to calculate? In this particular case, we are told that, okay, let me just show you the provisional tax payment there. So we've got the provisional tax payment under your SARS income tax of 405,500, right? So there was a provisional tax. So let me put it here, provisional tax. There was a provisional tax of 505,500. And then information G tells you that after the provisional tax was taken into account here, after the payment was the payment that was made for provisional tax of 405, we still owed SARS 35,500, meaning to say the 405,500 that we paid was not enough to cover the tax liability. So for us to know the tax liability, the tax that we're supposed to cover to pay there is going to be 405,500 plus the 15,500, because you are told that after paying your provisional tax of 405, you still owed SARS 15,500, meaning to say the correct amount of tax was supposed to be 405,500 plus 35,500, which means the correct amount of tax was supposed to be 441,000. So this is what you're going to do. So now we know our tax is supposed to be 441,000, and we know that net profit before tax is 100. Our tax is 30. The net profit after tax is obviously going to be 70. So we want to calculate the net profit after tax. So what do we want to get? What we want, 70. What are we provided with? 30 times 441. And then that will give you times 70 over 30. That will give you 1029,000 as your net profit after tax. So what are we saying? On your answer book, what are you supposed to do there? You're supposed to say 70 over 30 times 441,000, because the 441,000 is your tax liability, which we obtained by saying our provisional tax payment plus the 15,500, which plus the 35,500, which we still owe SARS, right? Which will give us 441. So what then? I'm just going to show you this: 70 over 30 times 441. So this will give us 1029,000, like that. That's what we're going to get. Now, the repurchase of shares, I think we already got that somehow, because they said here, from an unsatisfied shareholder for 30 cents above the average price. So remember, when you deal with buyback, the average price goes to share capital. Goes to share capital, and then amount above, right? Amount above will go to retained income. Go to retained income, which means your retained income, we're going to use 30 cents. Now, so what it means is that here I'm going to say 0.3 times 100,000 shares, because that is what was bought back. So it's going to be 0. That will give you 30,000. If I'm not mistaken, there that will give you 30,000. Now, and then the last thing that is left on that note is going to be the final dividend. Okay, so the directors declared a final dividend of 40 cents per share, right? It's 40 cents per share. That's critical. Secondly, take note here that the shares that were bought back do not qualify for final dividend. So in order to remind you, I'm going to pull it back to the previous one on ordinary share capital, where we already worked out and we saw that these are the shares that were bought back, the 100,000 shares with an average price of 5 to give you 500,000, and therefore at the end of the year we have 800,000 with a value of 4 million. And then these 800,000 are the ones that qualify for final dividend, because the question already told you that the 100,000 that we bought back do not qualify for final dividend, which means here for my final dividend, I'm going to say 0.4 times 800,000. If you put on your calculator, it's going to give you 320. Now, which means my total dividend is going to be 390 plus 320. That gives me 710. So to get my balance at the end, I'm going to work from the top, which means I'm now going to say 745 plus 1029 minus 30,000 minus 710 will give me 1034,000. That's what I'm going to get. So now, just to recap, in order to explain something further, please take note whenever you are given a buyback that, so this side here is your buyback price, which will affect the bank, and this goes to the cash flow. Okay, this side is going to be your average price. In this case, our average price was 5 rand, right? And then this goes to share capital. And then amount above average. In this case, it was 30 cents. 30 cents, right? It was 30 cents in this case. This must go to retained income. So So it is very critical for you to be able to do that breakdown, but that's how this question was supposed to be done. Thank you.